Hey everyone, you see me okay?
Yes, sir.
Absolutely.
All right, I thought we'd do something a little different today because what we do at Interaxis is we talk about things on the whiteboard, we interact by the whiteboard, we explain things, and I absolutely abhor preparing presentations. So I thought I would get up on the whiteboard. I hope that's okay. The only thing is I'm actually using my phone to do this, so someone's gonna have to let me know when I'm getting close to time. Give me the light or something. But are we ready to get started?
You're good to go.
You bet.
All right. We're going to talk about DeFi asset management. Now, we're qualified to talk about this because we're actually financial advisors. I'm a certified financial planner. We have an RIA here in Texas. We're going to talk a little about asset management in the DeFi space. I want to go back a little bit to what Jeremy was just talking about with CoinGenius, with CoinGenius Pro, and some of the analytics, and even going back and where he clicked on one of those on one of the projects and it actually went into detail as to who the founders are and what they're doing. And a little bit of what Ron, my partner, and I were discussing this morning that just came up is when we look inside for instance, the US equity markets, and I'll get to how this pertains to DeFi asset management. When we look at the US equities markets, for example, for the past 10, 11 years, they've all been moving in sync, which for the most part has been up, and most of it has been based on what the Fed does, and everything's just been moving up and up and up. All together, the S&P goes up, everything goes up. What we've seen after the huge drop in March and now the world changing due to COVID, people staying home, not staying home, going out, not going out, buying online, is now you have real reasons to investigate certain companies and understand why they should go up in value or why they should go down in value, what is really driving it. And it's not all people have more money and they're going to spend it, because I can spend money on certain things and I can't spend it on others. I can't really go to a restaurant right now, but I can buy food online, right? Am I going to see Nike ads anymore? Am I going to see athletes endorsing Nike so much because I can't even watch my sports anymore because they're not on? So we look into that. We're going to look into that more in terms of US equities. We're starting to get to that point in crypto and DeFi, where crypto and DeFi and cryptocurrencies were driven so much by traders wanting to get in there and go 10x or 100x and Lambo and Moon and all that, and really watching the technical charts, which is a lot of what, honestly, a lot of what CoinGenius, a lot of what AI was doing was looking at technical charts, looking at sentiment, how do we think people are going to trade? But part of what you guys have now in CoinGenius Pro is the ability to look inside the companies, the tokens, the projects, and see, is there a way that they're generating revenue? What we're seeing in DeFi, which is really cool, is there's a way that some of these projects are actually generating money. They actually have transactions fees that are being charged and being utilized. Again, I'm not endorsing any of these. I'm not telling you to do this, but you have companies that are doing really well, like Chainlink. Okay, there's a real need and reason for Chainlink. It's an oracle. It's really important, and you need the token in order to make the whole system work. There's a good reason for it. Okay, so now when we start to look inside some of these cryptocurrencies that you might be holding, might be trading, you can really look and say, what kind of basket do I want now? And that's where we get into DeFi asset management and how it pertains and how it reflects on and how it relates to traditional asset management. Okay, and I come from a background of traditional asset management. And in that, we look at things like allocation, right? We look at risk and how are we going to allocate in relation to our risk? What kind of risk am I willing to take on? And how am I going to allocate? How am I going to create a portfolio and rebalance? Okay, if I think, again, that oracles are really important in the decentralized finance world, but I'm not sure which oracles, can I buy a basket of oracle tokens, right? And watch those and rebalance those. So those might be some like Link, Teller, and Band. So is there a way that I can actually buy a basket of these, and maybe I want 33% each of these in this little basket, and I'm going to rebalance them as they get out of balance? Well, the answer is you can do that, right? Because we have something called set protocol, right? Set protocol is really cool in the DeFi asset management space because I can say, I'm going to create my oracle set. I want 33% each of these. And as they move up and down, I'm going to tell this, I want it to auto rebalance because I think oracles are going to be really important. Now, the other thing I can do is I can say oracles are really important. I want them to occupy 25% of my crypto or DeFi portfolio. I'm going to hold them, and therefore I might create a set on top of a set that says this is always going to be 25%. Maybe I'm going to have like ETH at 25%, and maybe I'm going to have some, some other like stable coin at 25%, and my set on top of a set is always going to rebalance that. So what we're seeing is the ability within the DeFi space to create this asset management, this robo-advisor type scenario that I can hyper customize, okay? And hyper customization is one of the greatest parts of decentralized finance, because what we do with the ability to enact this hyper customization is, again, I can either take my particular risk profile along with my particular scenario. What is it about me? What is my life like? Okay, well, here's how much money I make. Here's the family I have. Here's what I want to save for. Okay, I can take all those aspects and combine them into a very customized portfolio that says maybe I want 25% just holding crypto, right? And I get to decide what those are, and I want that rebalanced. And maybe I want 25%. The new thing, right, is yield farming, right? So tokens that are actually generating me some income, some liquidity pools, and I want to keep some cash or something like cash, like a stable coin, for various purposes. One might be because if all of this falls, I still have a stable coin. And two, because if there's some other opportunity that pops up, I want to have 25% cash or stable coin hanging around that I can take advantage of that opportunity, right? There's nothing as good as cash when you need cash, right? Cash is king almost all the time. All right, so maybe I want to have that. Well, in the DeFi world, I can create that. I can wrap it all up in some robo-advisor to where I can go about the rest of my day and the rest of my work and not have to worry about this all the time. Because when I got into crypto, which was a couple years ago, and I was trading it, it was 24/7. My story, and I've told this many times, is my wife at one point accused me of having an affair because I stared at my phone so much and she didn't know what I was doing, right? So now with some of these applications, these protocols that are created, I can do this in DeFi. I can decide what my portfolio is going to look like and fit it exactly to my life. Now within this, I might say, based on my life, remember I live in Houston, Texas. We're very centered on oil, right? Oil is everything in Houston. So based on my life, I might say I want to have a hedge, right? I want to hedge gas or oil and gas, right? Well, now with synthetics, with UMA protocol, I can now either create or find some sort of negative synthetic oil and gas hedge that says if the price of oil goes down, then I make some money, and it hedges my life essentially, because maybe my income or maybe the value of my home or something like that is really tied to oil and gas. And therefore, if the value of oil goes down and the value of my overall net worth maybe goes down, at least something goes up a little bit. And if this goes up a little bit, remember, I rebalance my portfolio. I might sell some of this hedge that goes up in value and now buy some of these that have gone down. Okay, and that is the essence of DeFi asset management. We have that ability now, whereas in the years past, crypto was all about either hodl and hope that everything goes up and moons 100x in Lambo and all that, or it was very much about trading, right, and trying to watch the technical indicators and get in and out at exactly the right times. Now I can be very specific about it. I can have a plan. I can have asset management behind it. I can hedge. I can have options. I can protect myself. Okay, but I have to evaluate my own risk. And part of evaluating my risk is not only what am I willing to lose, what in here am I willing to lose, but also I have to evaluate the technical risks. What is my risk of smart contracts being hacked? What is my risk of losing my private keys or having my private key stolen or having my daughter grab my phone and accidentally trade something, okay, which, by the way, has happened. So what risks do I have and what am I willing to take on? Can I offload some of that risk? I can offload smart contract risk potentially to something like Nexus Mutual, right? Where I can buy some smart contract coverage. Am I going to do that within this portfolio? In years past, a lot of the crypto traders and everything else, it was always like, I'm not hedging anything because if I hedge, if I insure, whatever it might be, I take away some of my gains. But now we're seeing DeFi as this tool, as this real asset management tool that is mirroring a lot of what I have in traditional finance and even making it better. It's even better than we have in traditional finance because it can happen instantly. I can look at the value of my portfolio instantly. I can rebalance anytime I want 24/7, and it can be done automatically, right? With very low fees, very low friction. And by the way, most of these are completely liquid 24/7. So anytime I say, I'm taking all my money out, I can go take all my money out. And now we even have the ability to move this into some sort of debit card where I can just go spend it sometimes. I can just go spend some of this cash. I can set up an account that says, okay, from this farming that's giving me some sort of yield, that's paying me a transaction fee over time for participating in a liquidity pool or participating in compound or something, this is going to go to cash, right? And that cash is going to be used to maybe fund my life. Maybe it's going to fund a vacation, something like that. So this is what we're seeing. And the rise of this has been seen in the traditional world in like Betterment, Wealthfront, Personal Capital. That's given us the ability to create these robo-advisors, this ability for goals-based financial planning. Okay, and the goals-based financial planning, somewhat said we've used it in the past, in years past, for goals like retirement, right, and college. Okay, but now we're seeing we can do goals like I want a vacation in 2 years, right? I want to take my family to Greece. Hopefully everything opens back up. It's going to cost $10,000 to take my whole family to Greece. I have 6,000 now. How do I get there? Okay, and Betterment and Wealthfront and everything gave us the ability to manage this 6,000 to hopefully get to 10, to the point that if it grows really quickly, they'll take some off the table automatically. If it goes down, they'll put some of that cash back in. Well, we have that in DeFi. We have the ability to create goals-based planning, highly, highly customizable. And what we're seeing is what we call the advent of and someone please stop me if I'm going too fast. I've had a lot of coffee in preparation for these. But what we call is the financial architects. Okay, this is the next generation of investment managers. And they're the people who can look, just like the Coin Genius team, they can look at the data, they can look at the technicals, but they can also look inside how yield farming works, how liquidity protocol, how liquidity pools work. And they can create these highly customized portfolios, or they can create protocols that allow me to do it. They can create highly customized funds. They can create funds that have growth plus income, income plus growth, growth plus hedge, negatives, whatever they want to do. And they can be 20-year-old kids who are really good programmers who understand the data and how the yields work and how the fees work, and create these unbelievable protocols and programs and algorithms that are going to be able to manage money. And they could literally be a kid sitting in front of a few computers anywhere in the world, and they're going to be the next generation of investment managers because they're going to digitally help you manage your money. All right, and you might think, okay, this is all happening within the DeFi world or within the crypto world, and it requires people completely trusting DeFi and crypto. But what we're going to see, and as Interax is actually going to talk about all next week, now we're seeing more and more real world assets being tokenized. Okay, so now what you have on top of that, and again, tell me if I'm going too fast, right now what you have is, once you have real world assets tokenized, so real world could be real estate, right? It could be NFTs, like we talked about yesterday, in the summit. It could be invoices, right? Companies that are shipping things that you can factor those invoices, and now those are online, and I can invest in that. It's certain, private companies. So now I can have a customized portfolio, some of which can be based in real estate, not online real estate, but real estate. Or I can create a program that I invest in certain invoices and I make a higher return where I'm willing to take on some extra risk. I can invest potentially in some private companies and have that all be part of my incredibly customized portfolio. Now the the financial planners that are coming up are going to have to understand all this, and they're going to have to understand how you can create customized portfolios for people based on 24/7 liquidity assets and be able to still offer advice. How can I still offer advice if algorithms and some 20-year-old kid programmer in India is actually creating this? How am I going to be able to offer advice? As a financial advisor, I'm going to have to figure it out. Everyone else is going to have to figure out how you still offer advice to people. But this is what we're seeing in the future of the world of DeFi asset management. The current state of DeFi asset management, we have some really good protocols like Set Protocol again that gives me the ability to create kind of a robo advisor. I can create my own set, or I can buy one of their sets, which is really great, right? It's either rebalancing sets or the social trader set, which says, here's a person that's done really well investing in different DeFi protocols or DeFi tokens. I'm just going to get to follow what they do. I'm going to own a token in my wallet. The token's going to follow exactly what this other trader does. And it's my way of buying into a fund. I'm buying into essentially a mutual fund by virtue of the fact that I have this token. That's exactly what it is. We have another one where we really like called Zapper.fi. Again, I'm not endorsing any of these. These are just some that we've seen that we really like. And Zapper.fi gives you the ability they were actually a Kyber Network hackathon winner. And they've now, it was DeFi Zap. They merged with DeFi Snap. So now they have an unbelievable dashboard and ability to connect my wallet and put me in and out of all sorts of different investments like liquidity pools, but they do it all in one transaction. So if I have ETH in my wallet and I want to go into the ETH maker liquidity pool on Uniswap and earn fees, I can do that in one, as they call it, a zap. It's one transaction. That's really important now, especially because gas fees have gone through the roof. And I, of course, want to do it in one transaction and not take that much time. And if I don't really know what I'm doing and I don't really know how to do it right, but I know that I like these tokens, I like the risk profile of them, and I want to earn a little bit of money as long as I'm holding them, Zapper will take care of that for me. And it's pretty awesome. And I can go to their website and see how it's performed. And I can roll out of that very quickly. So if it hits a certain point where I go, okay, I'm good, I've made my money, I want to roll out, I can do that. We also have Melon Protocol, which is out of Switzerland. And they've created the ability for someone to create essentially a hedge fund or an investment fund. And they've put together essentially all the paperwork, but it's all done on chain. So you can go check it on chain, of course, because all of this is so transparent. You can see the performance, you can see the relative value, you can see who's buying, who's selling, you can see I can set up a fund, which I'm trying to do right now on Melon's protocol, and launch it and get anyone in the world, essentially, ideally, right, to invest. And they connect their wallet, they get to invest whatever small or large amount of money they want to, and they can transparently see what I invest in. And if I perform well, then I should get more investment. It's not subject to going through and waiting for quarterly reports and seeing what I do on a monthly or quarterly basis and then deciding to put your money in and you can't get your money out for a year. You can put your money in today and stay in for a week and get your money out. You can see exactly what my fees are going to be because I can set it up like a hedge fund where I get my 2 and 20. I'm getting 2% management, 20% performance. I can do all that because Melon has set this up and made it really easy. And the latest one we've seen is PiDAO, which essentially takes the ability to create some sort of fund, like an ETF type fund, and brings in DAO properties. It says those that have bought into the DOE token actually get the ability to propose changes to the fund, and then we vote on them. and you vote based on how much of the tokens you own. So there's actually a discussion and a vote, and it allows for the preponderance of tokens of funds that people actually want to invest in. So wouldn't it be great if the research is, okay, everyone come into the Slack group or the Discord group, let's talk about what we want to invest in, we'll create the fund, we'll invest in it, and then let's watch and see what happens, and if we don't like it, we'll propose changes. And there's rules around how we make changes. Okay, so I hope that all makes sense. Now, we've actually bridged with the latest Hack Money Hackathon, a guy who was one of the big winners bridged everything, right? Which was pretty awesome. And he created something, and I'm not quite sure how much he's launched of it, but he called it My DeFi Pie, and I hope you all can read that. And what he did, which was brilliant, is he took the ability to use UMA, which allows you to create synthetic assets using their oracles online, and he gives you the ability to create essentially a traditional market portfolio in DeFi. And the way he does it is you can create, for instance, an S&P 500 synthetic token, and it's not on synthetics, it's using the UMA protocol, but I can create an S&P 500 synthetic token that moves up and down with the S&P 500, right? So now I can have a DeFi portfolio using my wallet that I connect and have tokens in there that are mine that I can probably trade to someone else. And I can hold S&P 500, I can hold crypto, I can hold Link, Chainlink, I can hold Teller, I can hold synthetics, I can hold ETH, DAI, whatever I want there. I can earn money using liquidity pools and using other yield farming techniques. I can do all that within my wallet. Of course, it's non-custodial. I'm not giving up my rights to anybody. I'm holding on to it. Now the key is I have to just monitor my risk. They're reporting their dashboard engines out there. Zerion is a great dashboard. Of course, Zapper has a dashboard where I can look across all of my portfolio and see what's happening, see how much I have in there, see what I've lost, what I've gained, how much I'm earning in income, because I need to know that for my life. I want to know how much income I'm earning, how much I've lost in value, how much I've gained in value. When I put money in, I can look at all my transactions. It's phenomenal that what took the traditional finance world probably 100 years to get to, in DeFi we've gotten to in like a year and a half. Okay, so I'm talking really fast. Let me ask, are there any questions? Are we even taking questions today? Anyone? How am I doing on time?
You have just right about maybe 2 or 3 minutes left. No questions thus far.
Are there any questions?
Nope, no questions. You're good.
No questions. I adequately explained everything in DeFi asset management up to this point. That is awesome. Okay, so what I wanted to end on is we also have these smart wallets, right? The ability to now have smart wallets like Argent, for instance. There's a new one called Digifox that I know of, and there are just so many of them. Dharma has one where now I can connect, my bank account potentially Apple Pay, and I can start getting involved in DeFi. What I want to warn everyone, of course, is be careful. There's smart contract risk. There's always, I don't say always, we have several issues of hacks. There's issues of gamification of the system. So be careful, dip your toes in, but really keep an eye on what's happening in the DeFi, really asset management space. Because in DeFi, what we're seeing is that, again, it's not so much the moon, crypto, trading, all of that. It's more into how can I grow my wealth? And it doesn't always have to be super quickly, but how can I grow it in a safe, efficient way? And how can I really understand what I'm investing in, why I'm investing in it, and make it a real part of my portfolio. And it's why I get up here and get so excited talking about it. And that, I believe, is all I have to say. Anything else?
All right. Well, thank you, Adam, so much. This was extremely informative. Really
Sure.
appreciate it. If anybody has any questions for Adam, what's the best place they can reach you?
Our Twitter handle is @Interaxis8, the number 8. And of course, you can check out our YouTube channel, YouTube/C/Interaxis. or interaccess.io.
Perfect. Thanks, Adam, so much. Really appreciate it.
Thanks, guys. Enjoy. Thanks for putting this on.
Absolutely. Have a good one.